What happens to your money when war breaks out? History shows that whenever global conflict starts, financial markets react immediately. Stock markets crash, investors panic, and trillions of dollars move in a matter of hours. But something interesting has been happening in recent years. While traditional markets struggled during geopolitical crises, Bitcoin and other cryptocurrencies sometimes move in the opposite direction. The big question is, does war destroy markets, or does it create new financial opportunities? Let's break it down. Point 1. Why wars shock the stock market when a war begins? Uncertainty becomes the biggest enemy of investors. Markets hate uncertainty more than anything else. Companies suddenly face major problems. Supply chains break down, energy prices skyrocket, governments increase military spending, global trade slows as a result. Investors rush to sell stocks to avoid risk. Historically, stock markets often drop sharply when conflicts start. For example, at the start of major conflicts, global indices often fall between 5% and 15% in the first weeks. Investors move their money into safer assets like gold, cash, or government bonds. But something interesting happens later. After the initial panic, markets often recover faster than expected, especially in countries not directly involved in the conflict. Why? Because governments inject massive amounts of money into the economy through defense spending, infrastructure, and stimulus programs. In many cases, war causes a short-term crash, but long-term economic shifts. Point 2. Why Bitcoin reacts differently. Unlike traditional markets, Bitcoin doesn't belong to any country. It's decentralized. That means no government can control it, freeze it, or shut it down easily. During geopolitical conflicts, several things happen that can increase interest in Bitcoin. First, people in affected regions sometimes lose access to traditional banking systems. Banks may close, currencies may collapse. International transfers may be restricted. In those situations, Bitcoin becomes an alternative financial system. Second, inflation often increases during wartime. Governments print money to finance military operations and economic support programs. When the money supply grows rapidly, traditional currencies can lose value. Bitcoin, however, has a fixed supply of 21 million coins, which makes some investors see it as a hedge against inflation. Third, global investors look for assets that are independent from governments, and Bitcoin fits that description. That's why during some geopolitical crises, crypto trading volumes surge dramatically. Point 3. When Bitcoin falls with stocks, but Bitcoin doesn't always go up during wars. Sometimes it crashes along with the stock market. Why? Because many large investors now treat Bitcoin like a risk asset, similar to tech stocks. When fear spreads across financial markets, investors often sell everything, including crypto, to hold cash. This is called a liquidity crisis. During those moments, stocks fall, crypto falls, even gold can temporarily drop, but once panic fades, the markets begin to separate again. Point 4. Who actually profits during wars? While most investors panic during conflicts, some sectors actually benefit. Defense companies often see rising demand because governments increase military budgets. Energy companies may profit if oil and gas prices rise due to supply disruptions. Cybersecurity companies can also gain importance because modern conflicts involve digital warfare. Meanwhile, alternative assets like Bitcoin sometimes gain attention as people look for financial systems outside traditional government control. Point 5. The big lesson for investors: the biggest mistake investors make during wars is acting emotionally. Fear leads people to sell assets at the worst possible time. But history shows something important. Markets eventually adapt, economic systems adjust, and new financial opportunities emerge. Some investors see Bitcoin as a hedge against geopolitical instability. Others prefer traditional assets like gold or defensive stocks. But the key lesson is this: understanding how global events affect markets can help you make smarter financial decisions. Finally, if you want to learn more about investing, Bitcoin, and how global events shape financial markets, make sure to subscribe. Because in today's world, understanding money might be the most powerful skill you can have.